Hello, everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with Bob Iacino here for the weekly stock sector overview, looking for potential stock sectors to focus on in the coming week for any plays. I want to start off with a macro conversation because we have S&P with cycles at the bottom. You see down here, cycles at the bottom and turning up. And we still have, on a weekly basis, we still have cycles at the top and not yet rolling over. The first time the roll over is when the red crosses below the green. And that is a stochastic RSI. I've listed off the parameters before. And we have a nice bounce back move. So we do have plenty of upside for possibly a week, week and a half still potentially left. Is it guaranteed? No, but it is a strong indication that we should still have room to rally. So now it's areas to address with where we should look for potential plays in that. And by the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term subscribers, please leave some comments and like the videos. All right, now we sort of got the macro out of the way, which we needed as a backdrop. Why do we need that as a backdrop? Because so many of these sectors are in sell mode. XLE has not hit sell mode, so energy is still not in sell mode, but very close to it. But we do have a potential double on there, so can't get bullish until the XLE gets a daily close above 72.14, and preferably, in order for it to be higher probability, you should get the close above the rotation zone, which right now is about 72.80. So that's what I'm watching for. Cycles are trying to get to the bottom and turn up there. So we'll be watching if we do trigger this potential double for plays in energy. Other than that, it could just be plays in crude futures for the time being. I really need that to trigger. Even though we're still in long-term buy mode, I need it. We pulled back a fair amount. I need it to show some strength. XLRE, real estate, still in long-term sell mode. So this, by the way, when you gap down, it closed above the peak. This did confirm the double, but did not trigger it. So that still is in play. Now, if this rallies back up and really gets above 41.60, this confirmed double is off the table. But if it gets closing below here, then there still will be some real estate shorts to consider. Not really interested in any real estate longs as well as it's in this range, because even if it pops up here, it would then turn into a sloppy horizontal channel. And I really need a close back above about 42 before I'm interested at all in the long side. And then you have the 50 right overhead. So this is a sector I'd probably just end up ignoring for the most part, even with cycles turning up, unless it can show a lot of strength. XLF financials, we had some finance banks reporting and trading firms reporting at the end, Thursday and Friday. Only one that was beat was Citigroup. So I'm sort of steering clear of this sector unless this potential double bottom on the weekly. It's still in long-term sell mode, but I need this potential double bottom on the weekly to trigger. So at least being aggressive would be a daily close above 32.87. It's horribly sloppy on the daily, though. It's sitting here right against the rotation zone, and we could even on a little rally. We have more banks reporting earnings at the beginning of the week, 32.26. So this is something I'm going to really steer clear of, because we could get more misses with financials, and then it's just short-term gap plays potentially. Now, if it starts getting above 32.87, you run smack dab in the 50. So that's why I'm getting really hesitant. I need this to really show some more strength and get earnings out of the way before I get at least interested. And then with cycles, could be at the top before that happens. So I'm not really, that's not my first area I'm focusing on, the XLF or financials. Now, technology is still in sell mode, but technology is attracting a lot of buying right now. We start getting a daily close, a minor close above about 132.70, 132.80, 85. Interested in any stronger technology plays. Cycles are turning up on that. And if we look at it on the weekly, they're at the top but not yet turning down. We're sitting against the weekly rotation zone. Now, this could easily run with the market for another week, week and a half. And remember, a lot of tech does not report next week. It starts reporting the week after. So keep that in mind. We do have stuff like Tesla. I don't know how to categorize them, but the big tech really starts focusing on, I mean, we got minor stuff like Netflix, you got Tesla, you got IBM, but that's not a major tech. Let's just see. The big ones, the big boys like Microsoft, Alphabet, uh, Facebook, Apple, Amazon. Amazon's a mixed bag because of Amazon Web Services, Intel. So that's Qualcomm. That's all the following week, the Fed week. Now remember, Fed is on the 27th. So could we see a continued play up in tech? Yes, and I get more aggressive in tech if we get a close above on a daily basis above 132.55. That would take it out of the way of the 50, and then we could definitely run. And the first target, I would not even use the full double target, which is 138.85 area. I'd be using this first target and watch for resistance at filling the gap, 136.33. So that's an area I will start looking at because we have some room to run up before major earnings. Now, I would not be playing things like Netflix because that's an earnings, or Tesla as a play getting in Monday and Tuesday unless you have a specific earnings play of it, because they could definitely have misses to the downside. XLI Industrials. Hold on one second. Sorry, I had to pause the video real quick. XLI Industrials, we're still in long-term sell mode, but we have a potential double bottom in that. Coming back, I'm watching it for to stall out and possibly kiss the channel goodbye, even if we get up to 87.87. So this is not a go-to sector unless we start getting a close back above about 88.35. Then I'll look for potential industrial plays to front run this double. And right now I have to update that. But again, it's a riskier play because I need something really outperforming in the industrial sector, because even if you triggered that double, you have the 50 right there. So if you want to be played on safer, industrials would not be the area I'd look to in my first go around. XLY, consumer discretionary, still in long-term sell. Let's just take a look. Cycles at the bottom and turning up, confirmed, and iffy on the weekly and still against the weekly rotation zone. So really, I need this to close above the 50, which is about 149. Before I get interested in any consumer discretionary plays, and I just have to make sure that they did not fall into an earnings release, and then it would just be a short-term pop because consumer discretionary is up against this major breakdown zone also, and up against the weekly rotation zone. So this, again, not one that I'm looking to first off unless I find something in major outperformance mode. XLP, consumer staples, I'm actually really interested in. Still, right here, we have not a long-term buy, but this could trigger a long-term buy coming back up. The double bottom still in play, but I'm more interested in watching for a close back above 73.35. And then that could be a front run for this potential double bottom. So you could find some plays. Now, if we trigger, this is actually turning into a triple top, so that's off. But if we close back below about 71.50, I'm not interested in consumer staples. But if this does break the upside, I am very interested in any consumer staples in at or outperformance mode with the market. So that's one of the ones I will go to first in that sector. You got cycles turning up on the daily and not close to yet turning down on the weekly. So we could have a week and a half of plays left in consumer staples. XLV Healthcare. Healthcare is back in buy mode after quickly dropping to sell mode. So where do we sit? We got that close back about the 62.5, tapped off the 87.5. So sort of confirmed that short term, but healthcare, Weekly cycles at the top, but not turning over. Daily cycles at the bottom and turning up. So healthcare is another one of my go-to sectors, especially if it starts breaking above 130.75. I will start watching for market perform or outperform plays in the healthcare sector. What puts a damper on that? If we get a daily close back below 128.28, which is Friday's low, then hands off at least until we fill the gap. And then real hands off if it closes back below about 126.39. So that's my hands off parameters, but as long as it does hold up and breaks a little higher, that will be an area I will look to first for potential healthcare plays. XLB Material Select, again, very oversold, deeply in sell mode. Had a little gap here against the daily rotation zone. Cycles are turning up, but really these would be aggressive short-term plays above 72.75 on a closing basis for just a short-term pop. And that might even be a 2 or 3 day pop. So unless you're playing something very nimble, let's check on those weekly cycles. Weekly cycles are interesting because they're at the bottom too with daily. So if you want some nimble plays, I will look for Material Select if there's something with good solid setups. But then I have to be aware that, again, we have pretty key resistance at 74 in the sector with the declining rotation zone. So it's going to be managing those positions tightly. Now, what it has going for it is daily and weekly cycles are at the bottom, and it's coming out of a divergence play. Your RSI making a higher low, your price making a lower low. So we already have a confirmed divergence with Friday's price action. If it breaks down, I'm going to be watching for a potential double bottom to form on the daily basis. And then I'd wait for the double. So there could be some interesting plays, although they are aggressive in the materials sector. Communications, still long-term sell mode. This is getting to a triple bottom on the daily. There's some interesting communication plays. If it starts getting a close above 55.69 because it's coming out of major overbought conditions with cycles at the bottom on the daily and not yet topping on the weekly. So we get it back at daily close. Preferably it would be above about 56. Then I'll watch for the gap fill. You still have a gap fill play here. And if there's any outperform communication plays, they have to be outperformed. I will then start to look at those if they have good setups. My key area of resistance now is up around 57.45 to 57.60 for this to top and then roll over again. So again, these could last for a week, week and a half, and then we get the rollover from the weekly rotation zone. So those are short-term plays, again, if it starts showing strength. XLU, I'm interested in this only if yields on the 10-year start dropping again. Yields on the 10-year start dropping. XLU, since its back is in buy mode, XLU will be a sector I'll start scanning. We also have this flag pattern pullback. So this starts getting back above roughly about 70.23 is a minor area I'll watch for, but aggressive I'll get when it gets above 70.57 on a closing basis. Then the 50 period is out of the way, and I can get much more aggressive on any utility plays. XRT, still long-term sell mode. Short-term, we do have a little potential double. It's a little iffy with this target going beyond there on the daily, but you see it's right there at the 4-hour. So I'll still watch for this to trigger. My first warning sign that to get long could be on a close above 61.11 with cycles at the bottom turning up. But the weekly is iffy. So I need some more follow through at least on a close above 61.08 and preferably 62.13 before I'll be looking for any retail plays. I don't know if I said transportation. I meant retail. If I said transportation, sorry about that. IYT's transportation, which now this is a triple bottom pattern, at least on the daily. On the weekly, it's still possibly, but that would be the weekly close. So I'm going to leave that on there. It's still in sell mode, but we start getting close above about 217.30. This area right here, I will start looking for some transportation plays. And where would my targets be? My targets on this would be about 220 and then above that 223.17. So you start topping out in here, aggressively move up stops in any transportation plays, and those would be on outperform transportation plays only. DVC, still in long-term buy, but coming down against the daily 200 and trying to form this double bottom. Now we get a daily close back above about 25.45. I will be interested in any commodity plays based off this gap fill. So I need a at or outperform commodity play. And then if it closes above 26.16, it could be rolled into a longer position as a commodity play. Now, gold could be very close in the next week or so, week and a half, to forming a long-term bottom. So that could be an area of focus along with some other stronger commodity plays. So that's something to keep an eye on, especially with this potential double bottom and still in long-term buy. Agriculture still in long-term sell, but a double bottom. I'll get interested if I can find any agriculture plays if we start getting a close above about 1990, then for a potential gap fill play up here. And I'll get real interested on a short-term basis if we get a close above 2052. Other than that, I'll be cautious until cycles. We could roll over again, pull the cycles down a bit before we get the longer-term play. Remember, agriculture is a subset of commodities, but I'm more cautious in that area because of its long-term sell mode. Semi's very interested in this because you got the Pelosi play introducing, or well, her husband buying all the NVIDIA that was just disclosed, and her trying to do that chip bill this week. So we'll be looking based off of that for any potential short-term plays only. Why? Cycles at the top on the daily, cycles not yet on the top on the weekly. If it starts getting some closing above about 217, I'll get more aggressive. But keep in mind, I put these in the riskier category because if that bill fails to pass with a vote or gets delayed, some of these short-term plays could roll over quickly. So that has to be managed very, very quick. But I will do scans in that sector based off the Pelosi play. GDX, starting to watch this. Long term, we're still in sell mode. Remember, we had this potential double that never triggered, and then we've had this massive sell-off in gold miners. Now, gold, as I mentioned before, potentially major bottoming play in the next week and a half. So if that starts happening, that's the only way I'm going to look at gold miners. VTV, Vanguard Value, still in long-term sell. We still have a potential major double bottom. So I really need this. This is still a valid double bottom on the weekly basis. Now I'll start watching value, which actually ties into some consumer staples also. If we start getting close above 133.40, we get that. That could be a front run play for this potential double. You got the 50 in the way up here, but then if that double does trigger, I'm really interested in more value plays for a sustained run back to the 200. So do not write off anything in the value plays. Again, if you want to know what's in this, you can look up specifically what's in the Vanguard Value Fund and start scanning for any of those individual stocks for setups. Growth, still holding up here, still in long-term sell. Growth, this did not invalidate it yet, so you get a close back above 236.32. Any at or outperform growth plays could make another short-term run up until the Fed meeting. Do not ignore the 244.60 area, though, if it hits that. I'm not looking at growth until I see a daily close that triggers this double because of the sloppy nature of it. All right, there you go. There's our stock sector overview. Hope that helps you come up with some good ideas to play this week. And remember, another potential week to week and a half before we get another substantial weekly top. That would take daily cycles probably to the top, and weekly cycles could start rolling over. So then I will start going back to a more bearish tone and shifting back to looking for more bearish plays, not only in the broad market, but individual overvalued stocks. Until then, I'll talk to everyone on the live streams and another weekly sector overview next week. Bye for now.